What is up, everyone? Welcome back to the Trading World. Today is November 19th, 2025. We're going to be reviewing price action on NASDAQ for the day, and we're going to be talking about all kinds of trades that you could have taken. We're going to jump right into it. First, guys, we had NVIDIA earnings, and apparently, it's sounding like NVIDIA so far is saving the market. But I will remind you guys about that short form video I made the other day where behind the scenes we do have this giant network where all the earnings of all these companies are intertwined with each other. I'm not saying I know what's going to happen. I just saw these two posts, and so I thought, might talk about it. As far as I go, I mostly look at the actual charts themselves and not too much about the fundamentals, but I do think this is interesting, right? Something to keep in the back of your mind that this could be going on. Anyways, guys, we are going to take a look at price action here. There's a lot of interesting stuff today. I'm going to get out the folder for today. And yes, I'm going to be more consistent, guys. I'm going to make these market recaps every single day. First things first, the most obvious trade of the day, I'll just show you right on the charts, was right at market open. We come down. We have this 1 hour gap here. Well, that's a 15-minute gap. We have this 1 hour gap here. Check this out. 1 hour for value gap. What does ICT always say? The bodies do the damage, the wicks tell the story. Or, I don't know. I don't know if he says that or if it's someone else. No, it's definitely ICT. But the bodies the wicks do the damage, the bodies tell the story, and you can see that's exactly what occurs. Look at how the bodies hold this 1 hour gap, the wicks dig into it. And one reason you could have known to maybe look for longs is, well, we have all of these unprotected highs. So if I get on the 5 minute, which is the aligned time frame, right, you can see we have all of these unprotected highs here. The easiest trade of the day, if you had your bias right, was to take a long off of this 1 hour gap just with a 5 minute change in state. I'll show you guys that in just 1 second. Let me pull this up here. 1 hour aligned with the 5 minute. Here it is. So we had an obvious accumulation range, right? The 1 hour gap. So this is the flow state model where you take a higher time frame key level and you align it with a change in state of delivery on the aligned time frame. So for a 1 hour gap, like you saw here, I'll remind you guys what is a fair value gap. It's a gap between a sequence of 3 candles where the wick of the first candle and the wick of the third candle don't overlap. You see that gap there? We get a 5 minute change in state closure off of it. That is the simplest way you could have traded today. You would have had to have the bias right. I will say this. You would have had to have the bias right, which required observing these low resistance highs and then taking this 5 minute change of state to go run up to them. From that point of view, it was a very easy day. From my point of view, I wasn't sure if this was going to be low resistance or high resistance. I thought maybe it would be high resistant. Turns out I should have just looked at the obvious and said, yo, this is going to be low resistant here. And you can clearly see that it was. So going back to that image, I'm going to pull this up again. Right, 1 hour for value gap, accumulation, manipulation. By the way, at the lows, you can see here we had SMT with London, and we swept out the lows. We actually, at the low here, this is a Phoenix model, guys. So we had SMT with that rejection block. Check this out. It was on the 5 minute, and it even went down as low to the 1 minute. And I was talking on stream like, guys, if I don't really like to do the lottery or anything like that because I just know the odds are rigged against me. But if I was to ever be a gambler or do gambling, I would so much rather just YOLO into a 1 minute rejection block with SMT and gamble like that, like on these super high RR Phoenix trades, than ever buy a lottery ticket. I don't know, just a thought. I just don't get why. I know lottery is rigged against me, but this, I feel like I might have a chance to catch a 20R here on something like this. It's just a thought, but yeah, there are realistic Phoenix trades that are not this extreme, but I just wanted to show you guys how precise these markets really are here. So, okay. What happened next? Well, there was also another trade within here that if you didn't want to take that 5-minute change of state off the 1 hour gap, I'm not going to lie, it might not have been that obvious to you, which is, it was, I clearly didn't see it. You could have taken the inversion for value gap on the 3-minute here. So this was the inversion for value gap, right, where we inverse this gap. You would be taking it with a 5-minute external gap, meaning we had not inversed the 5-minute yet, but because of conviction in the draw and liquidity, which is these relatively equal bodies here, you could definitely take this even though the 5-minute hadn't inversed and front run that 5-minute inversion based off of conviction, right? It's all based off of conviction. Even if the 5-minute, so to show you guys what I mean, right? We have a 3-minute inversion here. Even though the 5-minute had it inversed, and I'm merging these 3 candles into one, because just conceptualize that. If you merge these candles together, it's going to be a gap. We inverse this gap. Oh no, that's a 2-minute. Whoops, sorry. 3-minute gap right here, right? We inverse that. Technically, there was a 5-minute gap. You're supposed to technically wait for the highest time frame gap to inverse, but with conviction, in the draw and liquidity, like in this case, these low resistance lows, or just this consolidation maybe, you could definitely front run the 5-minute getting inversed, and you can see that's exactly what happened. Let's get this pulled back up. Boom, 3-minute inversion. For me, so dodgy put stop here. I would put stop below the breaker, and I know that gives less RR, but just understand that that I know that this is a breaker, so I want to put my stop below that breaker. But that's a little small. I mean, this is basically the same thing, so it's fine. But then you could have with this trade, you could have also just said, hey, this is nice. This is a nice inversion, but the RR is not that good. I'm going to wait for a retrace. So you could have entered on a limit order on a retrace. I call that a Jan entry. And all of a sudden, you go from a kind of crappy 1.5R to probably 2.5R. And so you enter on that retrace, and that's amazing, right? So you just improved your trade very slightly. So anytime you enter on a retrace, I call that a Jan entry. So I have that marked up here. Let me find that Jan entry. Where is it? There it is. I don't know why it took me so long. But yeah, here you can see I had it marked out on the 4-minute. I guess it was more obvious on the 3-minute. But 3-minute gets inversed. Then you just enter on a retrace. Specifically in this case, retracement to that breaker. So enter on a retrace. Now, I'd probably give myself a little bit more room than I put here. But you can see low resistance liquidity at these highs. The market expands aggressively through those highs because there were even more low resistance highs off to the left over here. And guys, if you guys remember from anything from my other videos, this is going to be rocket fuel. It's going to send the market on a crazy stop run. That's what this is, by the way. The reason the market's aggressively expanding, conceptualize what's going on. Everyone who bought in this range, this accumulation range, is getting stopped out on this move higher. So you're basically placing an order to go stop out the people that were in this range. Or you're taking profit where these people on this range are getting stopped out, which is up here. Make sense? So from that point of view, understanding that those were going to be low resistance highs, the day wasn't actually that complicated. Another thing I'll say is about the morning is you could have easily expected, you possibly could have expected New York to continue, because why? Because we got session SMT below midnight. And so anytime you see a manipulation of midnight, you know, okay, that's most likely going to be a London low of the day. And if you guys know anything about the daily profiles in the daily profiles videos, if London makes low of the day, New York is likely to continue in that same direction, right? That London mid low of the day. So this is a London, well, technically, I don't know, it gets kind of complicated over here, but this at the start of the day it was a London reversal, and then New York continuation. Daily profile. Okay. Now, and then, right, another cool thing about this is we perfectly go below every single true open. Did I put an image of that? I can't remember. Yeah. So look, we have SMT with London. This is why true opens are really helpful, because it allows you to pinpoint exactly where the manipulation is likely to be. It's below every single true open. We get SMT with London. And then bang, we get the reversal, right? So it's filtering out where the manipulation probably was, right? It's below all of these true opens, and now we know we can get on side with distribution. What is this, by the way, guys? This is the first minute for value gap. On the 1 minute, we had a liquidity sweep of these range lows, and then we broke structure. Let's get into that trade next. So it's a 2022 model as well, where we get a sweep. We get a liquidity sweep of that range. It's just a giant range, so I just marked out that as a sweep with SMT with a 5 minute gap. Then we get a break of structure here, retracement to the first presented for value gap. Once again, this is the first presented for value gap, so it's going to be stronger than a normal for value gap. And so you could take this as a 2022 model, meaning liquidity sweep. What's the 2022 model? Liquidity sweep, so we sweep out lows, we get a reaction off of lows, we break structure, we break an old high with displacement. Once again, as long as there's displacement, I don't really care if it's a technical break of structure, it's just displacement. Then retracement to a fair value gap to go run liquidity. That's the 2022 model. And liquidity is just old highs or old lows or ranges. And so we retrace to a fair value gap. I just put stop below the breaker. And so you could take this as a 2022 model. And yes, a lot of time you do want to, with the 2022 model, you do want to see equilibrium or OTE get tapped. But in this case, because of displacement, I actually don't want to see that. I actually will just want to see this fair value gap get held right away because of displacement, right? So in this specific instance, I wouldn't want to see us come back down to OTE or equilibrium because we're displacing higher. And so then we go to run those low resistance highs. And you can see as well that it does expand for the entire rest of the session. So that was a really nice 2022 model, aka TGR's model or whatever you want to call it. And then I'll try and wrap things up here. So as well, right, with this first presented for value gap, you could drop down to the aligned time frame, which is the 15-second. Get extremely precise with this, and you can see we have like a micro market maker buy model on the 15-second off of the first presented for value gap. So this is my first strike model. Guys, go watch the video I just made on the first strike. But once again, we sweep out London, then we come back, push down into the first presented for value gap, get a reaction. Right here, we get a 15-second change in state with this candle closing above this thing. And so I would enter right on that close with stop at the low. So entering on a 15-second change in state close. The reason this one is because this is where it's obvious that to me, it's going to continue up to the upside. And then you could take 4 projections of this, and then that brings you up there. And then if you just held it all day, it would just keep going, which is cool. I'm going to try and wrap things up. So another cool thing about true opens today is the reason we came back down, once again, fits in line with true opens because we come above every true open. And now once we get up here, we're literally above every true open all the way up to the true week open, right? We take out true week open. We're above midnight, 7:30, 9:22, which is the true day open, true session open, true 90-minute open, and then we're above the true 22-minute open. So we're above every single true open. The high forms at our 369 time, 10:17, and then we fall back down. So conceptualize what is really going on, right? We had no more. We taken out those draws and liquidity, and we're above every single true open, and now we fall back in. That's why we came back down so aggressively. And lastly, I'll talk about PM very briefly. So in PM, we basically had a 2022 model where we got a sweep of midnight with SMT, break of this high. Then I'm merging these candles together. So this candle and this candle together create a 5-minute gap. And then if you merge all these candles together, it's a 5-minute BPR. You can see then we form accumulation, manipulation, distribution. We perfectly tap OTE right at the sweet spot of, I think it was of the manipulation leg in this case, the sweet spot of the manipulation. And it was like the regular OT of the displacement. And then so this manipulation occurred below true day open. This inducement occurs below 1330. And then let's drop down to a lower time frame. And so you could have just entered right on that gap, or you can get crazy precise with it, and you can wait for a 30-second change of state. So this is one way to take the 30-second change of state. This way is kind of scary. I would not recommend necessarily taking it like that. Note the low happens at a 369 time, 1440. Boom. That was exactly when we tapped 0.705. And yeah, so 5-minute 2022 model. Then we can take a change of state of delivery out of that fair value gap on the 5-minute. I call this 2022 plus, where we wait for an aligned time from change in state of delivery off of fair value gap. So liquidity sweep, displacement. Once again, it's not an obvious break of structure, but there's displacement. Then we have accumulation, another low time frame AMD. And so this, we get a 30-second change of state here off of the 5-minute BPR. This occurs right at 1449, which is 1 plus 4 plus 4 is 9, plus 9 is 18. 1 plus 8 is 9, so it's a 369 time. Bang, 30-second change of state. We deliver up to those low resistance highs. Crazy, guys. Crazy stuff. All right, I think that covers basically everything for today. Hopefully you guys enjoyed this video. I'll see you in the next one. Peace out.